Hey, Nate, how's it going?
Hey, good, David. How are you?
Good, thanks. I know you and I talk routinely about news going on in the real estate space to try to stay up on strategy for what we're doing with our own investing in the market. And you and I found this article recently we wanted to dive into, right?
Yeah, so this is a Wall Street Journal article with a super clickbait title, but I think there's an interesting nugget in there. There's never been a worse time to buy instead of rent. The news basically sells itself, right, David?
Yeah. And I would think that a realtor might be particularly sensitive to a headline that says, like, don't buy real estate, right? Like, that feels really powerful. So I'm curious your thoughts, just to start us off with your realtor hat on. Like, tell me your thoughts about this article, particularly about like pricing and interest rates and some of the variables the author brings into this debate.
Yeah, I think what they're trying to get at here, and please definitely check out the article. That's why we're linking it here. We recommend just giving it a good read here because there's some interesting data talking about just the cost of the mortgage payment. Right? When you think
Mhm.
about housing, the thing we kind of tend to gloss over is that you have to obtain a mortgage in most cases. Very few people out there are buying houses in cash, especially newer pharmacists, newer investors. It's
Right.
just not happening as much. Right? You're typically buying these houses with a mortgage. And when you have that mortgage, you are basically paying a fee to borrow that money. And that fee to borrow that money is what we call the mortgage interest rate. And it has been going up and up and up if you've not been
Yes.
paying attention. And so that is a problem, right? If you're buying a house, the fee to borrow that money has gone up.
Yeah, and I think anyone that has owned a house recognizes too that that's not the only fee of home ownership, right? Like
Mhm.
when you rent a house and the furnace goes out, you call the landlord or the property management company and someone comes out and fixes the furnace, right? But if you buy the house and the furnace goes out, like suddenly you're responsible for that. And I think that's one of the big reasons why we've talked for years in this podcast about how your cash flow as a rental property owner isn't rent minus mortgage. It's rent minus mortgage minus a bunch of other expenses because there are other expenses associated with owning a house. So you stack those expenses on top of a higher mortgage, and it suddenly starts looking kind of expensive to buy a house right now, right?
Yeah, especially if you're thinking about things like even something simple like down payment, right? Coming up with that down payment has gotten more difficult. The prices have gone up over the last couple of years, and so it's a more down payment that you're going to require. And then every dollar you don't put in that down payment is a dollar that you're then financing, which means that then you're paying again that mortgage rate on it. So it's gotten a lot more expensive, and everything has, but it's gotten a lot more expensive than it was in the past. And so I think that's what the article is trying to say. That look, if you really break down some of the numbers, there are people that are sort of stuck on the sidelines waiting for that they had a great line. They had that waiting for the payment to paycheck calculation to work for them. And I think that's spot on, right? That number has to make sense. And right now it's making sense for a lot less people.
Yeah, I think I could definitely see that from the buyer standpoint of just feeling this frustration, like particularly if you're looking at an existing rent rate that's kind of
Mhm.
reasonable and looking what a mortgage payment would be, plus all the other expenses of having a house, plus the down payment, plus moving, plus, and just feeling frustrated that like it's really hard to buy right now. And so I would imagine that would have impacts in the market, things like transaction volume, right?
Yep. A lot lower than it was before, right? People are just listing their house less often, which means there's less to buy. And people that are ready to buy might have to take a year off and rent for another year when they were planning to buy a whole bunch later. So I think it's decreasing that transaction volume quite a bit. And then on the landlord side of things, right? That means that it's more likely that your tenants are probably going to stick around, right? People that may have been ready to move on at the end of their lease and go off and buy might not be able to do that now, right? As a result of everything that we've been talking about. So I think that there are implications whether you're a buyer or an investor in this case.
Yeah. And so obviously from this angle, we're thinking about it from the investor side, but you have to think about the mentality of the tenant or the buyer. So if you are flipping houses, you may know that that exit price may just be higher than what a lot of people were expecting, even just a few years ago. And so there may be just a difficulty in acclimating to that higher price, and you may have less demand for flipped houses, particularly thinking about different price bands in the marketplace. So knowing that there's a lot of local differences there might be a good time to talk with the realtor about where are people buying in this market to make sure that a house flip plan makes sense. And similarly from a landlord standpoint, if you're thinking about getting into a rental property, thinking what are people expecting to pay? and at what price point are people just sitting on the sidelines from buying? They would rather rent, and there's a lot of demand for rentals at X price point. Like those could be things that you could bug a local realtor about to drive some investing decisions based on these kind of patterns of behavior that have shifted over the last few years.
Yeah, definitely a great time to get a local expert and get their take. Like you said, a great real estate agent, a great property manager. That's going to be key, especially moving into 2024.
Yep, absolutely.